Hello, my name is Sergey Tomchani, and today we're going to discuss the global outlook for the foreign exchange markets. I have Alice and James here from the FX team of Work Investment Fund. Alice, we saw great performances from the dollar and strong downward trends from the euro and the yen. What do you think is going to happen in the coming year?
Well, I think worldwide we've seen depressed interest rates, and as a result this is having a negative effect on the profitability of carry trades, which are those where you use one currency with a lower interest rate and buy it against another currency with a higher interest rate and reap the profit in between. Also, because of the high volatility that's been occurring recently, we're seeing that the rate differentials are particularly low as well, and this is having a problem making carry trades more risky. We've also seen in 2014 that there's been a lot of directional movement with low volatility, and we're expecting in 2015 for this to change and the economic landscape to be more volatile as we move towards trends being less meaningful in the future. As a result of this, we're seeing that swing and carry trades are going to be less of an important feature of 2015, and that we're going to move towards maybe intraday trading as being more fruitful.
Okay. So talking about volatility, do you, James, believe that we can expect the trends of that we saw in 2014 to be continued next year, or is it going to change its performance?
Well, for the US dollar, I believe that the reason why there's a strong bull run for the US dollar is because of a divergence in financial policies between the US and the rest of the world. So like for the US, we are currently experiencing a very strong economic recovery, and as such the Federal Reserve has decided to stop its quantitative easing program, whereas the European Central Bank and the Bank of Japan is currently expanding and increasing its quantitative easing in order to bring its economy back in control. So currently the Eurozone is experiencing a 5-year low inflation, which is really quite bad, and the Bank of Japan, Japan is experiencing a technical recession as it has negative growth for the last 2 quarters of this year. So these fundamental factors are not going to change in 2014 and for 2015. So I expect for the US dollar to increase and appreciate in value to a new record high by the end of 2015. However, I do not believe that this appreciation in value will be as directional and as straightforward as what happened in 2014, as a lot of people, institutional investors, retail traders, we are all already long the US dollar. So there's a lot of consensus that the US dollar is currently overbought and there's a risk of a retracement happening sometime soon. So I would advise traders to actually wait and see, and maybe look for a good opportunity to buy into the US dollar instead of looking to buy in immediately, as the risk reward ratio is not very good currently. So in the next year, I expect volatility to increase for the US dollar, like what Alice has said, but that is only for the first half of the year. For the second half, when we are nearer towards the projected rates hike, the US dollar will likely pick up in pace again and start appreciating in value.
Okay, but Alice, we have seen weak performances from the euro and the yen, but do you maybe think there is any buying potential for these two currencies?
Personally, I think the fundamental weaknesses between Japan and the Eurozone are likely to continue, because the main long-term problems with their poor performance recently are likely to persist, and quantitative easing will need to continue to be used to move them out of that position. Furthermore, Japan is currently in a technical recession, as James has currently said, because it's been in 2 quarters of negative GDP. In combination with this, recently, in the next coming months, we're likely to see some form of correction in the yen, and this is going to make it quite difficult for trading, and it's most likely going to be a good idea to avoid trading the yen over the coming months. With the Liberal Democratic Party in Japan as well, there are some problems that they're not entirely sure whether they're going to be able to maintain their performance at the moment, and whether they're going to be able to directly use quantitative easing for a longer period of time. With the euro, the main problems are if there's an unexpected use of sovereign quantitative easing, although we've seen that this is likely to be pretty inevitable and has mainly been priced in the markets already. So what is largely going to be more important over the coming months for trading will be the triggers of QE. So if we see continued low unemployment and low interest rates, this is really going to be the important part of our trading aims as opposed to the quantitative easing in itself.
Okay. And talking about trade ideas, obviously Alice is saying that there's going to come a time where we'll have to avoid trading the yen. James, do you have any other trade ideas that you would prefer to take on in 2015?
Okay, a trade idea that I really like for the 2015 is to short the Aussie dollar, because like I said previously, the US dollar is looking really good for next year as well. But for the Aussie, there's several vulnerabilities and risks that it is currently facing. So firstly, for this year, Aussie has performed very well, but that is on the back of capital inflows from abroad, because there has been a resource investment boom in Australia. However, this is not likely to continue or at least sustain in its current level for the next year. And another problem with the Australia's appreciation in its currency is that it is a major trade partner with China, and 6% of its GDP is consisted of exports to China. However, with the slowdown of growth in China, this number is likely to decrease, and as such, the demand for Australian dollar will likely decrease as well. So these are like two downside risks that the Australian dollar is facing, whereas the US dollar is looking really strong. So this would make up a good pair to trade on based on fundamental analysis. Based on technical analysis, I would advise that traders short the pair at a spot rate of 0.8710, and the stop loss and take profit level should be extended, as this will likely be probably a pretty long trade, maybe of a few months at least, as there's a lot of potential to take profit at a very far away level, since this is made out of fundamental factors and fundamental weaknesses. If China's growth actually slows down, the US dollar is likely to increase and spike up by quite a high amount, because the US actually just has 1% of GDP that is consisted of exports to China. So people may view US dollar as a good alternative to buy into when Chinese currency is actually going to depreciate.
Thank you. And that was the outlook for the FX markets for 2015. Thank you, Alice and James, for being with us.
Thank you.
Thank you.